Good afternoon. This is Scott Mason, TradeAlyticsLive.com, and today we're going to talk about the S&P 500 trading the ETF SPY, and we're going to talk about Apple. So if we're looking at the rising channel here on the SPY, this is a daily time frame. This rising channel typically is very bearish. However, a lot of times when they start to drift very slowly upward, at some point you start to see an exhaustion top, and I believe that's what we got yesterday when it poked through the 142.25, which is the area that we've been talking about over the past 3 or 4 trading days, and we're looking for that breakout on 142.25. We got it yesterday. Made some really good money. However, we're still being very cautious because the market actually needed to close above the 142.25, and it didn't. It actually came back through there, and then big volume came in on the downside. So we covered all of our longs in the portfolios and on the radio, just letting everybody know, listen, this is what's going on. It's about time to book some profits in this market. So what we call yesterday was an outside day, meaning that it reversed and then closed below the previous 2 days in the market. So now that we've got a break of the rising channel, it looks very bearish. If we don't get a close above the 141.50 on the SPY from here, then I believe that some selling pressure could come into the market, and we really don't have any support until right back down to the low end of this channel, which is right around 139 or 1392 on the S&P 500. So be aware of those levels, 141.50. We have to close above there. If we don't, I'm having a bearish sentiment over the next couple days. And if we do get a close above there, then all of a sudden you have a 75-cent range between 141.50 and 142.25 on the SPY. And then the market is really undirectional until we break or close on either one of those levels. So pay attention to those levels, extremely important. All right, let's look at Apple. Apple yesterday, 4 or 5 days up. The stock already ran $50. Okay, it got up to as high as was it 674.88. Okay, so 674.88. It gapped up on the 4th day. I'm always leery about those 4th day gap ups because here's what happens. Okay, if we look at a 15-minute time frame, here's what we have. Okay, it gapped up, and then within about 45 minutes to an hour, it formed this nice little pennant. Now, coincidentally, I'm looking at this pennant to trade the break, either up or down. I was actually leaning more toward the downside because the stock has already ran. Okay, so right when this happened, the stock got downgraded, and then it went from 670, took a nice short in it for 5 or 6 points. Didn't expect it to pull in like 14 or 15 points like it did. However, that did happen, and the stock came all the way down to 650. And where is it going to go from here? We don't know, but I do know 2 things. Either the stock is going to come back down and retest the 644.50 2-week high breakout, which is this long-term trend line right here that you can see over the next couple days, or it's going to consolidate here, figure out a direction, and then stay with the trend. Maybe it continues to go higher, but we don't know right now. I think it's going to stay in a 10-point range for a series of a few days, and maybe even come back and test that 644 breakout. So pay attention to those levels. If you're an Apple trader, it's probably going to be in that 10-point range because it's Apple, and that's just what Apple does. So hope these 2 things help you. Again, Scott Mason, TradeAlyticsLive.com, and we'll see you here tomorrow. Have a great day.